Hi, good morning to all of you. First of all, let me thank BFSI and Amol in particular for inviting me for today's conference. It's an absolute privilege and honor for me to be here today with you. The topic given to me for speaking today is evolution of BFSI and serving the new world. So let me first talk about the evolution of BFSI that I've seen in the last 40 years. I think there are a lot of speakers today who will talk about what is happening on the digital space. I'm not really an expert so much as far as the digital is concerned, but I can talk about what has happened in the last 40 years in this BFSI space from what we were and where we are today, actually. I believe that the BFSI industry was among the first to adopt as well as get impacted by the digital wave. Though I've been associated with all segments of BFSI industry, I've been involved with the banks, insurance, mutual fund, all the segments, but most of my first-hand experiences actually come from banking. So when I talk about banking, I think it applies to all the other segments of BFSI also. So when I joined SBI in 1982, we were not even allowed to use the calculators. We could, however, use a mechanical device called a facet machine for doing the calculations. I don't know how many of you have seen it. I think they have already put it. So this is what the calculator we had when we joined the bank 40 years back. Now, can you imagine how do you do calculations on this machine? You actually punched a number and you rotated that lever and that number would move up actually. And then you wanted to add a second number to that, then you punched that number, rotated it again, and then that result will show up on the top side of the machine actually. So if you wanted to say multiply number by 4, so you rotated it 4 times and then you get the result actually. So this is what the digitization in banking was actually 40 years back. So from that, we moved from facet machines to calculators. Then we had slightly more advanced calculators which could do balancing. Then we had something called ledger posting machines. Then I think the unions in the banks became very liberal. They allowed you to use computers. But they said those computers have to be standalone computers, which can actually have only the data for that particular branch. You could not have networked computers. I think it took a long time for the banks to actually move to networked computers and the CBS systems where you are actually centrally connected. So the speed of change in the BFSI as far as digital part is concerned has been very, very rapid. We have moved away, in fact, a lot away from where we were and where we are today. In fact, now we got to a stage where people are saying, going forward, we don't know whether you actually need the banks at all or not. I think you remember that famous quote by Bill Gates, which said that the banking is required and probably the banks are not. And what is going to be the future of banking? I think at this point of time, nobody can really say that what the future of banking will be. But will we see the bank wither away? Will we not have banks going forward? But I think it's too early to write the epitaph of the banking. We have seen the banks rediscover themselves, come up with more innovative and imaginative products to take on the competition that has been posed by the new age fintechs. What we may see going forward is not so much of competition, but the collaboration between the banks and the fintechs, where the banks bring in their geographical reach, their access to the customers, and then you work with the fintechs who actually bring a lot more innovation, a lot more agility to the new product innovation, and then you can serve the customers much, much better. An important part of the evolution of BFSI has been the digitization and the data analytics. Even though the banks had a very large number of customers, the banks processed a huge amount of data on a daily basis, but they had no centralized databases on who their customers were, what kind of transactions they were undertaking. They didn't really know how to make use of the data that was residing within the banks itself. As I said, that we first had, the branch-specific computers, and we moved to the CBS. Only after moving to the CBS, you at least had some data. So for the SBI alone, SBI, we have over 45 crore customers. But even after having so many customers, so what do you do with that actually? So unless you have capabilities to be able to process the data, that data is actually useless. So the banking has moved from what we can call a branch banking, I think you will probably still meet a lot of old people who will say that in our time, when we used to go to the branch, we'll sit with the branch manager, have a cup of tea, the branch managers knew all their customers, and all of their needs could be taken care of by the branch managers. So you move to a situation where the branch manager may not even know all the customers. The branches of today are more of delivery points rather than the relationship points, actually. So nowadays, at the centralized level, the banks actually have much more data about the customers and about their behaviors. In fact, the banks have more data than the customers would probably like the banks to have also. The data the banks have these days comes from essentially two sources. One is the bank's own internal sources of data. One is the data that you submit when you open an account with the bank and you give the KYC data, which means your Aadhaar details, your income details, your profession, your residence, so many details that you give when you open the data, when you open an account with the bank. But I think what has become more important in the recent years is the external sources of data about the customers that can be accessed by the banks. So which includes the bureau data, popularly called the CIBIL data. You can also get the GST data, the income tax data, and even things like mobile users data, even users of gas cylinders also. This data explosion that has happened in the recent past has actually enabled the banks to be able to do much more analytics on all the information that is available and be able to offer more products to the customers. Is it the end of it? I think there is a lot more happening. The accounts aggregators have just started. I think the banks have started supplying data. I think still not all the banks are there, but a lot more data has started becoming available there. Recently, both SEBI as well as IRDA has written to all the entities under their control to also start supplying data to accounts aggregators. That has not started, but it will happen soon. So you can then imagine, again, the GST data also has started flowing to the accounts aggregator. The amount of data that becomes available through the accounts aggregator itself will be so huge that ultimately it will be the limitation on the part of the people analyzing the data as to what they make of the data actually and how best they can put the data to use. Over the year, the banks have actually invested a lot of resources into building data analytical capabilities. So, which basically includes both the physical data sources, like the banks have invested in data warehouses, data lakes, you built your servers and other capabilities. But the banks have also hired a lot of data analysts, data scientists, a lot of people in their data divisions who can actually sit and analyze all the data that is now available. In my earlier days, it would have been almost impossible for somebody to walk into a bank branch and get a personal loan. I think, and you can compare with the situation today where you get a lot of actually messages from your banks saying that you have been sanctioned so much of loan, and you just need to download the bank's app and get the loan there itself. Actually, you don't even need to visit the bank branches. This has all been made possible by the data that is now available, which enables the banks to undertake their risk assessment and to be able to sanction these loans. So even if you had the data, you analyzed the data, you actually found out the customers to whom the loans could be sanctioned. But I think the challenge still for the banks was that how do you approach those customers? Generally, in the past, the banks tended to share the data with the bank branches, and the branches were required to contact the customers and then provide the loan, actually, which was not really a very effective manner of doing this work. That is where I think the banks like, the apps like what the SBI came up with is the SBI YONO that came into play. Okay, so what we did with the SBI YONO app was that there were three parts to that app actually. One was, of course, where you could do all the banking transactions. The second part of the app was the investments that could be done using the app, which included investments into mutual funds, into insurance policies, your credit card monitoring, your demat account, everything was built into that. And the third was the marketplace, where you could actually access all the merchant sites and do all the shopping also. Though the bank actually did not get any benefit out of making available all the merchant applications on that YONO app, but in the bank we thought that that's a good hook to get the younger customers onto the bank's app, who may not actually be so familiar with the bank's app actually, but you offer them some discounts and some deals on the merchant apps, so they will probably be attracted towards actually opening their account with SBI and start using those apps. So the YONO, what it did was that it actually brought a lot of new customers to the bank. It enabled opening of accounts by the younger generation with the bank also, and also helped the bank to deliver these products on the fly to the customers. So when the bank did all the analytics on the customers that is already there, you took the outside data, the bureau scrub was done on all the customers, and then we identified who are the customers who could be sanctioned these loans. The data was pushed onto the app. The customer only had to download the app, okay, and he could actually see there that he is eligible for a loan actually. And the bank did away with signing of any documents also, which meant that the customer only had to do a few clicks on the app, agree to the terms and conditions, and the loan was straightaway disbursed into the account of the customer. Now this is something which could not have happened at all without two things. One is the data being available, the data being analyzed, and the app through which all of these products could be delivered actually. So I guess this covers a little bit of the second part of my presentation, which was about serving the customer. So the evolution has happened from the facet machine to the new age, all the digital analytical capabilities that are available with the bank, and how these are being used by the banks to be able to serve the customers also. So as regards serving the customers, do you know that in Time magazine, 2006, who was the person of the year? So in 2006, Time magazine declared the person of the year as, I don't know whether if anybody knows, it was you, Y-O-U. I think, can we go to the next slide? So this is 2006. Here the you meant that in the internet age, you control everything. So control meant that you don't really have to go to anybody. You are on the net actually, and you decide whatever you wanted to do. So for example, if you wanted to book any travel ticket or a movie ticket, you went to the net, went to the website, decided which show you want, which seats you want, and you booked it yourself. You don't really have to depend on an outside agent to be able to do that actually. So similarly for the banks also, so you had internet banking, so you went to the internet site of the bank and you concluded whatever transaction you wanted to do. While this brought a lot of convenience to the customers, actually what one does not realize at times is that all the work that the employees were supposed to do was being done by the customer himself. So in the process, the customers were turned into the employees by the organizations. So if you make a mistake entering the beneficiary account number, it's you who made the mistake. You can't hold the bank responsible for that. And not only that, it allowed the banks to be able to undertake a lot more transactions that could have been possible physically doing in the bank's branches. So I think if you look at the number of UPI transactions that are happening now, it could not have ever happened in a physical bank branch at all actually. So in a way, what happened was good. It empowered the customers, it empowered the people to do a lot of things, but at the same time, it actually made the people to do the things which till now was being done by the branches also. So my sense is that the customers don't mind it as long as they are in control of things, they get good experience doing out of it, and they know that what they are doing is safe and secure. So going forward, I think how the customers would be served going forward and where the organizations will have to invest would be one, they are required to build digital infrastructure. I think some of it has already been built, but probably it still needs to be scaled up much, much more, because as you see more data coming in, more information coming in, I think so that system required for that would have to be very, very robust. superior data analyticals using machine learning and artificial intelligence. I think artificial intelligence in the thing, Amol referred to about ChatGPT also. So I think these days any speech should start probably with a declaration saying that this has not been done by ChatGPT. But what impact it will have actually? I think on ChatGPT also, so everybody is experimenting as to what can be done. I think still the use cases for this have not really been worked out. But I think it's only our imagination which probably is limiting its use. I've been talking to my friends about how we can use ChatGPT. I think every day I hear new ideas in terms of how it can be done. You know, probably all the chatbots will get replaced by ChatGPT. Filling up of forms on the internet will also probably be helped by the ChatGPT going forward. So there are a lot of innovations that will happen. And that is where the organizations will have to start investing in terms of how do you make best use of the artificial intelligence capabilities that are getting developed. Then I think the customers will be more concerned about the data privacy. I think that is the biggest concern that we'll have. While you don't mind using internet for doing things, but you need to be sure that the data is secure and it's not going to be misused. And the organizations who actually invest into data privacy will be the ones who will actually be successful. The next would be the cybersecurity. I think that is again one of the biggest issues. There are a lot of people I know who don't use internet banking. There are people who don't use mobile banking. And some of the people who don't use are the people who are coming from the IT sector because they say that we are aware of the risk involved actually. And knowing the risk, I will never use internet banking or mobile banking. So I think so some surety about the security of the systems is very, very essential. I think it's very important for organizations to invest in the cyber security and be able to give a comfort to the customers saying that their data is safe and they have absolutely robust security environment in which they are operating. And fifth, I think, and the most important thing from the customers would be is that the customer experience that they get when they operate on the customer-facing applications, be it mobile banking or internet banking, etc. actually. So I think the user experience defines. The users are not really concerned about what is there at the back end actually, how good your back end is actually. So they are more concerned with what they see, what they experience. And that is where more innovation, more investment will have to happen going forward. So I guess the organizations which invest in these 5 things which I listed will be the ones who will be successful. And the ones which are not able to make use of these growing opportunities will be the one that will be left behind. So I hope that this digital conclave, there are a lot of speakers who are listed actually. In fact, I talked about the SBI YONO app. So many of the people who are actually involved with this are also listed as the speakers. I see Sandeep Opale, I see even Samir Shetty was in McKinsey at that point of time, and Shiv Kumar Basin. So they are all going to be speaking. And there are a lot of digital experts who will be speaking. So I will leave the digital part for them to speak. So I thought I'll give you just some perspective on how BFSI has evolved over the last 40 years and what the customers' expectations are going to be going forward. So I hope that there will be some very interesting possibilities that will get discussed in this conclave. And my best wishes to all of you for a very interesting and productive sessions ahead. Thank you.